Okay, so let's dive in. Today we're looking at something that, if you follow the markets, is probably on your mind, and that's Federal Reserve Chair Jerome Powell's comments on President Trump's tariffs.
Yeah, these tariffs were announced just recently on April 2nd, and right away everyone felt like, whoa, what's going to happen with the economy? This is a big deal. And what we have here that's so interesting is that these are Powell's first public comments since those tariffs were announced.
Yeah, I mean, when something like that happens, everyone's kind of like waiting to hear what Jerome Powell has to say about it.
Right, and he delivered these comments at a conference for business journalists.
So we're going to really break it down. Like, what did he say? What does it mean? What should you be taking away from this? And how could it possibly impact your investments and your money? Like, what should you be thinking about? We're going to try to unpack all of that.
And, typically a Fed chair is very careful about commenting on policies from the White House or Congress. So the fact that Powell even brought up the tariffs in his remarks is something worth paying attention to.
Yeah, he mentioned the tariffs. He did lump them in with some other factors like immigration and fiscal policy and regulation.
Right.
But he did mention them specifically as, something that could be impacting, the economy. So let's get right to it. What was Powell's biggest concern about these new tariffs?
Well, the main thing that Powell brought up was inflation. He said that these tariffs are very, very likely to cause at least a temporary increase in inflation. But here's the thing. He didn't just say temporary. He also said that it's possible for these inflationary pressures to last for a while.
Yeah, that's what gets you worried, right? Like if prices just go up for a little bit, maybe it's not a big deal, but when it keeps going, that's when everyone starts to worry.
Exactly. And you have to understand that the Fed learned a big lesson in 2022 when they thought inflation was transitory. Powell is basically saying, hey, these tariffs are a real inflation risk and we don't want to make the same mistake again. The Fed wants to stop a one-time price increase from turning into a long-term inflation problem.
Yeah, it does kind of take you back to 2022, doesn't it? Like there was all this talk about inflation just being a temporary thing, and the Fed kind of waited to see what happened. But now it feels like they're much more aware of how bad it can be if they get inflation wrong, and they don't want to let that happen again.
Right. And the problem is that if these tariffs cause a bigger trade war, then businesses might just keep raising prices because their costs are going up. And then, who ends up paying for all of that? The consumer.
Yeah, so we could see like higher prices for everything we buy. And nobody wants that. Now, there's this other term, stagflation, that people have been talking about. Did Powell say anything about whether that could happen?
Powell didn't use the word stagflation, but he talked about all the things that could cause it. He said that right now the economy is kind of a mixed bag. Like the job market is still strong. Remember that March jobs report showed we added 228,000 jobs, but people aren't feeling as confident about the economy, and we have this sticky inflation. What sticky inflation means is that prices are staying high, even though the things that were causing them to go up in the first place have calmed down. So even though inflation's under 3%, it's still higher than the Fed's 2% target.
Right. So some things are looking good, but other things are like warning signs. And then Powell mentioned a higher risk of both higher unemployment and higher inflation happening at the same time.
Yeah. And when you have both of those things happening at the same time, rising unemployment and rising inflation,
Right.
Well, that's stagflation, even if Powell didn't use that word. And the problem is that the Fed's usual tools for fixing the economy aren't really designed to deal with both of those problems at the same time.
So if the Fed mostly uses interest rates to try and control the economy, how does that work when you have both high inflation and high unemployment? It seems like you can't win.
It's a tough situation. Raising interest rates is usually what the Fed does to fight inflation because it slows down the economy. But when you raise rates, sometimes it can also lead to slower economic growth, and that can cause unemployment to go up. On the other hand, lowering rates can help the economy grow and create jobs, but it can also make inflation worse. So it's like a catch-22. You try to fix one problem and you make the other problem worse.
So what did Powell say the Fed would do if both inflation and unemployment started to get a lot worse?
He said that if both of those things were happening, the Fed would focus on fixing whichever problem was further away from its main goals. And the Fed has two main goals, keeping unemployment low and keeping inflation at 2%. So they would try to fix whichever one of those was worse.
So depending on what happens with inflation or unemployment, that will probably determine what the Fed does with interest rates next. Now, there's this idea of uncertainty that keeps coming up in Powell's comments. Can you explain why this is so important?
Yeah, Powell keeps talking about how uncertain things are right now. And he was saying the same thing back in March when the Fed decided not to change interest rates. He said that the economy is doing okay right now, but he's worried about what might happen in the future because of these new trade policies.
And it seems like the stock market is worried too, right? Like the S&P 500 dropped quite a bit in just 2 days.
Yeah, the S&P 500 fell by 10.5% over those 2 days. And the Nasdaq Composite, which has a lot of tech stocks, actually went into a bear market. It dropped 5.8% on April 4th and 22.7% since its highest point back in December. The S&P 500 was down almost 6% on April 4th and 17.4% from its high point in February. So the markets are definitely reacting to all this uncertainty.
So even though Powell didn't come right out and say that people should sell their stocks, it sounds like he's saying that the economy could be in for some rough times because of these tariffs, and that both unemployment and inflation could get worse before they get better.
That's right. And the market's reaction shows just how worried investors are about what Powell said.
So what does all of this mean for investors? I mean, those people who are watching their portfolios every day are probably feeling pretty stressed out right now.
Yeah, it's been a tough couple of days for people who are constantly checking their investments. It's hard to say exactly how these tariffs are going to affect different parts of the market in the short term, but President Trump seems pretty determined to keep these tariffs in place. So it looks like they're going to be around for a while.
But some people say that this could be a good opportunity for people who are regularly investing for the long term. What's the thinking behind that?
The idea is that when stock prices go down, you can buy stocks for a lower price. So if you believe that a company is going to do well in the long run, then buying their stock when the price is low can be a good idea.
It's all about looking at the long-term picture instead of getting caught up in the day-to-day ups and downs. And history shows that the stock market usually goes up over time.
Yeah, the U.S. stock market has bounced back from some really bad times in the past, and it's always gone on to reach new record highs.
And the S&P 500 has never failed to make money for investors over the long term. But we'll probably have to wait a few more weeks or months to see what the real impact of these tariffs is going to be.
That's an important point. We're still figuring out how all of this is going to play out, and we'll learn more as we see new economic data in the coming weeks and months.
So to recap what we've talked about today, Jerome Powell's reaction to President Trump's tariffs basically tells us that things are very uncertain right now. The main concerns are that inflation could spike, and we could end up in a situation where we have both high inflation and high unemployment.
And the point for you, the listener, is that you should understand that the Fed is worried about these tariffs and that the economy could be headed for some tough times because of them.
So that brings us to our final thought for today. Since Powell said that the Fed would focus on fixing either inflation or unemployment, if both of those start to get worse, which economic indicators should you be paying attention to in the coming months? By keeping an eye on those key signals, you'll have a better idea of what the Fed might do next, and you'll be better prepared for whatever happens with the economy. Thanks for joining us for this deep dive.
Yeah, thanks for listening.